presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, folks. Tommy O'Brien coming to you live from TFNN. Thanks for joining me for the final hour of the trading day. And we got a bunch of news stories, folks, coming at you. And it kicks off with the Treasury. Yeah, they're going to be buying back more of our long-term debt. That accelerates things this morning. And there's your acceleration on the S&Ps when we get that announcement at 8:30 this morning. Now, what's remarkable is, okay, the 10-year is pretty much right where we were when we kicked off the day. But you got an S&P right now positive by 0.3%. We were as high, making a run for those all-time highs. At 77.64, you give up some of those gains. We're currently trading at 77.36. And yeah, that little volatility there at 2 o'clock, the market digesting the Fed minutes. Okay, as Fed officials seeing the need for rate hikes if inflation does not cool. Now, they're going to get some more data, right? They get August data before the September meeting. Nonetheless, NASDAQ 100. You give up those early gains, right? Tech stocks under a bit of pressure today. You're down by 40 points or about 0.1%, right where we were coming into that 8:30 announcement from the Treasury. 29,545. You got a Dow up 117 points or 0.2%, 53,519. And the Russell, sometimes those small caps, a little bit more yield sensitive, right? They're up by 12 points or 0.4%, trading at 3,038. And as I mentioned, you get over to yields. So we're positive by 7 ticks, okay, but we were already in the green coming into that announcement. Really, the 10-year has not moved that much at all, which is surprising. We're at 4.65%. Now, the market had already eased a bit, okay, in terms of coming off. We were at 108.09 yesterday, right? Pushing almost 4.75 on the 10-year. You came into that announcement already higher by 14 ticks, and we just drift up a bit to 108.25, 4.65 on the 10-year. The 30-year likes that news, though. It sure does. Yeah, and you get over to the yield curve, folks. So the 30-year is up a full point and 10 ticks. You're at 109.31. You're basically trading right at 110 right now. Okay, and you take a look at the yield curve. And yeah, you know, not a tremendous amount of movement, you know, except when you go to that very top end. They had a 20-year auction today, so you get 9 basis points of movements on the 20-year, 9 basis on the 30-year. The 10-year was already moving. The 10-year had already moved 5 basis points coming into that announcement, right? All the yields had moved a little bit, so you do get a reaction. But boy, folks, where the reaction is most pronounced is the dollar, okay? Now, I've been trying to put this one together fully. In terms of, this was the last Fed meeting, okay? And the last Fed meeting, the dollar just starts trading lower, man. It cannot find a bid since then. And so what may be happening here, right, is the market's saying, okay, here's what they're going to do now, right? That we're going to repurchase our own debt to keep yields artificially low, but who's going to want to hold our dollars if we're using our own dollars to buy our own debt to artificially keep the rates low? Okay? And, you know, it's undeniable, right? Yields haven't moved from that announcement, folks. And we got the dollar pulling back extremely. And hey, one of the easiest ways, okay, it's one of the risks out there running a debt like we're running right now. That debt has to get paid off. We have debt service numbers. The easiest way to pay off that debt is through a weakened dollar. Now, inflation does it, right? A weaker currency does it because you're paying it back in the same way. And hey, we'll see where we go from there. But yeah, that's the headline. And you better believe that's giving gold a bid, man. Because if they're just going to start using the dollar to buy our own debt back, to artificially try and keep down those longer-term yields, doubling the guy. Now, what's absolutely remarkable is that they just came out with the repurchase plan 2 weeks ago. So they could have done it then. They could have done it the next time. But no, they said, we got to do it right now, man. Yields are a problem. And gold says, we'll take that. Thank you very much. We will take that with gold. Up by 3.2%, up 141 bucks, 45.62. How about that acceleration, folks? And the equities, yeah, you better believe it, up by 8.6% right now for the GDX. You got silver up 3.7%, 66.39 right now. You jump over to platinum, up by 5.3%, 18.26. Quite a run for platinum, up $92 right now, 18.26. Copper, not quite participating. Copper flat at 6.48 right now. All right, some of the other stories. How about Moderna? mRNA. Look at this run, baby. Up 150%. Okay? And yeah. You pull this one over. Merck's getting a lift too, because it has to do with their Keytruda as well. But yeah, you're talking about, now what I was talking about this morning as well, is that, as they put it here, it's the first positive final stage trial for any mRNA-based cancer therapy. And what it did was it met its main goal as the vaccine combined with Keytruda, which is from Merck, prevented melanoma returning after it was surgically removed more than just using Keytruda alone, right? And it also slowed the spread to new areas of the body. So, you know, the promise of a future there. And yeah, 150% to the upside. They always say, the example everyone always uses, right? When you say, you know, if you go short, your losses are unlimited, right? I mean, that company could always come out tomorrow and they have the cure for cancer. Moderna does not have the cure for cancer, folks, okay? But it is remarkable when you type, you know, the exuberance. And just to put things in context, though, yeah, quite a run up in 2021. They pull back, and that's quite a move. Moderna up 150% on some positive results for their melanoma, okay, vaccine combined with Keytruda, which is from Merck, and Merck gets to lift on that news too, because they're going to use they're going to lose patent protection on that at some point. And yeah, now they can combine it with potentially that vaccine. Now, the thing about that vaccine, folks, is that this is an individualized vaccine. Okay, as in they literally take a biopsy or use, right, what your tumor is actually like, and then they have to develop that vaccine personalized. It's a personalized shot, okay, that they then take. It takes 6 weeks. This trial was 1,100 patients, okay, and that vaccine was given every 3 weeks for as many as 9 doses, but so they have a long way to go before this comes out to the public. When you think about it, you have to actually biopsy those. You know, how does this happen in terms of a large scale? But pretty encouraging results, and the market's reacting today. Merck up 13%, Moderna up 150%. How's that one for you? We jump over to NVIDIA shares. There's some volatility on the open for you. NVIDIA, trading right now flat. We jump around to some of the memory stocks. Yeah, these things, man. How's that for volatility on you, man? 70 bucks on the open, 50 bucks on the open, right? Moderna. Micron, down by 1% right now. You jump over to SanDisk. SanDisk right now, there's some volatility, down by 3.8% right now. All right, folks, stay tuned. We got an S&P up by 23. We got yields easing a bit, and we got gold pushing higher in a big way. And when we come back, folks, we're going to be talking with Sean Edwards from Direction, Vice President, Institutional ETF Strategist. We're going to be talking some ETFs, folks. Always a great segment with Sean. Come on back.
Researching trading techniques on how to begin your trading journey. You've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got an S&P right now up by 22 points. NASDAQ down by 33. And right now, folks, we're going to talk to Sean Edwards. Sean is with Direction. He's institutional. He's a vice president, folks, institutional ETF strategist. We talk to Sean about once a month, and we talk about ETFs. And, folks, if you want to find out more about Direction's great products, you can head on over to the front page of TFNN. You see those great Direction banners over there. And, yeah, we're going to talk about some of those ETFs right now. Sean Edwards, good afternoon. Welcome back to TFNN.
Hey, good afternoon, Tommy, and thanks again for having me. Another exciting day to talk some volatility that we're seeing in the markets and ways to take advantage using our ETFs.
You know, it's pretty cool, Sean. The yield's in focus today, but we just got Fed minutes, of course.
Yes.
But I wanted to kick it off, if we could, with some of the energy. You know, crude, of course, handling things pretty well, all things considered. We're at $84.36 right now for a barrel. But I wanted to talk about crude because, man, we got, we're 6 months almost into the skirmish, the war with Iran, and crude price is handling it pretty well. But for those energy traders out there, you guys have some great ETFs. Can we kick it off with maybe some energy for traders looking for some exposure to the energy sector?
Absolutely. And as you mentioned, Tommy, the Middle East tensions are back in focus as hopes for a U.S.-Iran progress, they are fading. The Strait of Hormuz remains restricted, so it impacts a key route for roughly 20% of global oil consumption. As you mentioned, Brent cruise around 84 was around or above $90 yesterday, near a 3-week high. So as markets are continuing to price in prolonged supply disruption as a result of the tensions around the Strait of Hormuz. So for those traders who want to trade the volatility around energy, I'm going to list off a few different ETFs that you can look at trading to take advantage of some of those swings. As we know, higher oil can reignite inflation concerns and influence rates. So there are quite a few trading opportunities within energy, but then also rates. To start with energy, you can look at ERX and ERY. That's our pair for the Direction Daily Energy Bull and Bear 2X ETFs. Provides exposure to the Energy Select Sector Index. Again, these are tactical short-term trading tools that's providing that daily exposure to that index, 2x daily exposure. Secondarily, you can look at Gush and Drip. We've talked about this particular ticker symbol, I feel like, all year, Tommy, just because it's providing exposure. Right, exactly. It's providing exposure to the S&P Oil and Gas and Exploration and Production Select Industry Index. So that is bull and bear 2x exposure on that index. So as we are seeing these swings in the price of oil, this is where we're seeing traders trade in and out of Gush and Drip throughout the year. Now, also a newer strategy that we launched, not more than a year old. The ticker symbol there is TEXU. That's a Direction Daily Energy Top 5 Bull 2X ETF. So you're going to get exposure to energy-related companies, some of the top companies like ConocoPhillips, Exxon, Chevron, SLB, and then Williams. So within our energy, suite of leverage ETFs, there's quite a few options that you can look at taking advantage of. And as I mentioned, higher oil, it does complicate the rate outlook. We did see the Fed, did announce that buyback of bonds as well. So we're seeing that the Fed is looking to take action as well. But oil also impacts the rate outlook. So we see the 30-year Treasury yield, it reached 5.33%, so the highest since around 2007. So if these oil prices stay elevated, long duration bonds could remain under pressure. So for those traders that are looking to trade volatility around interest rates, you can look at trading ticker symbol TMF and TMV. So that gives you exposure to the long end of the curve, with the exposure being the ICE U.S. Treasury 20-plus year bond index. So again, TMF, if you're bullish bond prices, TMV if you're bearish bond prices. So again, the Direction Daily 20-plus year Treasury Bull and Bear 3X ETF for the shorter end of the curve. So the 7 to 10 year Treasury Bull and Bear ETFs, you can look at TYO and TYD. So again, that's the 7 to 10 year Treasury bond index. So quite a few tickers. I know I read off quite a few, Tommy, but I think they could be helpful for the traders that are listening currently.
Oh, and boy, those yields, man, and the headline's almost right. They don't, right? They do write themselves. It's in like highest 30-year in almost 20 years was coming out there. And so they're going to see what they can do. And pretty cool when you guys at Direction, you bring the 3 times to some of those leverage. And so check it out, folks. TMF, TMV, pretty cool. You get some types of 3 times when, boy, we got some volatility in yields right now, man. Jumping from there, Sean. We're in earnings, man, and I'm always talking about the single stock ETFs, but semis in particular. But the big dog, man, NVIDIA, they got earnings coming up. You guys got some great ETFs for NVIDIA, of course, but talking about semis, please talk to me and the traders what you guys have in focus with the semis and NVIDIA earnings coming up.
Absolutely. NVIDIA reports that next week. We all know NVIDIA is the bellwether when it comes to semiconductors. AI spending remains strong, but I think many traders, investors, they're looking to see whether or not the growth can keep pace with the expectations that we have as investors and traders. Right. So we're looking to NVIDIA. So for those traders that want to trade volatility around NVIDIA's earnings, you can look at ticker symbol NVDU, which provides 2x exposure, bull exposure, to the underlying performance of NVIDIA on a daily basis. Or you can look at the inverse, which is NVDD, which provides inverse 1x bear exposure to the performance of NVIDIA common stock. So NVDU, if you are bullish, you want 2x exposure. NVDD, if you're bearish, if you want to, hedge your current position, or if you're just simply bearish.
And it is pretty cool, and not to jump in, but for those investors out there, folks, if you got positions in NVIDIA and you just want to go risk off without selling your position, right, and taking that capital hit, it's a great use in that capacity too, which is pretty cool.
Absolutely.
Yeah.
Absolutely. Thank you for that, Tommy. And then if you want broader exposure to the semiconductor sector, our largest ETF, which we have seen tremendous flows in and out as traders look to take advantage of the semiconductor trade, is SOXL. Cool. I know many of your traders are probably trading that currently. Again, ticker symbol SOXL, 3X Bull ETF on the semiconductor index.
Pretty cool. Those semis. We're going to be writing about those for years, Sean. I mean, these moves, right?
Right. The volatility there is amazing. And then also, if you're bearish, you can look at ticker symbol SOXS. That's inverse exposure to the NYSE Semiconductor Index. And then again, one of our newer launches, if you want concentrated exposure to some of those hyperscalers or semiconductor names, you can look at NVIDIA, Micron, Broadcom, AMD, and Taiwan Semi. You can look at our top 5 semiconductor ETF. That ticker symbol there is TSXU and TSXD. And for those traders that want to trade the theme of AI, you can look at ticker symbol AIBU. and AIBD. That's the Direction Daily AI and Big Data Bull and Bear 2X ETF. So some of the names mentioned, they're within that broad basket of stocks that give you exposure to those companies participating in artificial intelligence and big data.
And hey, we only have 1 minute left, but I got to get into Liftoff and SpaceX and Tesla as well, because you guys have the bearish one now as well. I saw, man. You know, Liftoff is the 2 times, but you got the bearish. So please talk to me about Liftoff and LOFD, please.
Sure, really quickly. I think many of the traders are familiar with LOFF. So Liftoff, LOFF, 2x exposure to SpaceX. Now, we recently launched inverse 2x exposure to SpaceX as well. We're going to see tomorrow 319 million additional shares becoming eligible for trading. So additional supply, creating volatility. You can trade the bull or the bear, whether you're bullish or bearish. SpaceX, we have the tools for you. Again, tactical short-term trading tools. Monitor your trades daily. And as always, go to our website for more information. Again, thank you, Tommy.
Sean, great stuff, man. They're the 2 times, folks, on the bull and the bear on SpaceX as those unlocking. Sean, appreciate it, man. Look forward to talking to you next month. Thanks so much, brother.
No problem, Tommy. Talk to you.
Have a good one. We'll come right back, folks.
Bye-bye.
Letters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direction's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. ALPS Distributors, Inc. Welcome back, folks. And we got S&P positive by 25, NASDAQ off by 13, and SpaceX. Yeah, you pull back sharply, and it is so remarkable how many of those shares are going to continue to be unlocked to be able to sold as you go throughout the year. It's something like 4.5 billion shares by year end, folks, are going to get unlocked for people that own private shares before the IPO that they can sell into the market. Okay? And Elon's chunk, which is like 6 or 7 billion shares, I should get the exact number, that doesn't get unlocked until next June. Now, he's probably not going to sell anyway by then because that would just tank the stock in itself. But those unlockings, you better believe it. And as Sean was finishing up there, pretty cool. Now, they launched Liftoff literally the day that SpaceX started trading and IPO'd. And then about 2 weeks ago, they launched the Bear, and they're both 200%. So if you're looking for a way to short that equity or just buy it long. And again, folks, they're daily investment vehicles, right? Daily leveraged and inverse ETFs. And if you want to find out about more of their products, check out the Education Center. They have great information. It's all free, You hit the Education Center and you can just say start here. All right. But right here under getting started, understanding leveraged and inverse exchange traded funds, and then volatility matters. They're great just walkthroughs that kind of just show you, how these trade when you're talking about leverage, talking about 2 times bull, 2 times bear, 3 times bull, 3 times bear, right? And you see, it shows you what are they using? Well, they're using a mix of derivatives and equities. And on the bear side, they're using straight derivatives is how they're doing it. And then what's cool, though, is it shows you how your exposure varies, and it shows you how your long-term returns are impacted depending on how the market moves. Talking about if you have a trending market, right? What's your return going to be versus 3 times the return? If you have a choppy market, what's it going to be like? There's your trending market. All right. And yeah, you can see. So in this example, right, you have an index that goes up 35%. You buy the 3 times bull. But guess what, folks? On a longer term basis, now this ETF got held from April until December, 8 months, right? But sometimes it works on your side, sometimes it doesn't. If you're bullish and you get a momentum market that just keeps going up, a 3 times return ETF is almost like adding leverage, right? The entire way up. And so if you just keep going up, you're just adding leverage. So actually, in that example, you get 157% return by holding the 3 times. Now, it can go the other way, But they're great educational pieces, folks. Check it out. And yeah, SpaceX. And congrats to the team at Direction. They got great products, folks. They get these things out so quickly now. And pretty cool that there's an easy way to short some of these highly volatile vehicles. And buyer beware, though, folks, Put some stops in because SpaceX alone is trading with tremendous volatility. And you add in a double, right? You got liftoff. You're trading 2 times. You're down almost 6% right now. Pretty cool. All right, we jump back to yields. There we go. We're catching a little bit of the action we got from this morning. So let's talk about the Fed minutes, because maybe that's a continuation of what we going on at 2 o'clock. Talking about some Fed minutes. Let me find that right one. Oh, that's not it. Forgive me. I had too many good. There we go. Look at all the headlines we got up here. Trump is talking with technology leaders. OpenAI is going to be a public company in 2027. I think we all kind of know that. So Fed minutes. Yeah. Rate hikes, they may be needed. Come on, Bloomberg. If the inflation continues. And they're going to get more data. With regard to the outlook for monetary policy, participants reiterated that their interpretations of incoming information will be a key component of their deliberations. Well, surprise, surprise. Most participants anticipated that inflation would step down over the rest of the year, but many, so you got most and then you got many, right? They love those terms. They choose those words very particularly. But many participants noted the possibility that inflation might be more persistently elevated. And yeah, the Fed's so-called counting words, right? The term many is used to describe a group that's nearly half of all of them, including officials who don't vote, though. We want to know what the voting members say. So, yeah, you get those Fed minutes at 2 o'clock. We got yields easing a bit. But today's all about the dollar, folks. That's my take. You know, we got a weak dollar. You got gold catching a real acceleration, baby. And we got silver daddy memes going on in the den, folks. That's the kind of day we got going on, right? Hey, the spirit animals are alive and well in the gold market. Look, it's not stopping, man. Yeah, you're getting another acceleration on the Fed minutes. Hey, it's an acceleration of everything going on. You got gold up $145 right now. GDX pushing back to those highs, up by 8.9% right now. We jump over to silver, up 3.8%. Let's check out the silver equities. Hecla, up 13.5. How's that one for you? All right. Harmony, up almost 10% right now. First Majestic, up 12%. Yeah, Endeavor, up 13%. Look at these moves, man. I mean, no matter where you look in this market, folks, okay, the dollar's getting decimated. It's a good day to be in gold equities. Agnico Eagle, and, if you're talking about direction, folks, don't forget about Nugget and Dust. Okay, there you go. And JNUG and JDST. The 2 times bull and, let me, before I, the 2 times? Let me make sure I get it right. I think it's the 2 times. Yeah, Nugget and Dust. That's the Gold Miners Index, Bull and Bear 2 times, ETF. How's that one for you, man? From 160 to 184. And then you got JNUG is the juniors. Up 17% today. Oof. Doesn't matter where you look in that market, man. Let's take a look. You got McEwen up about 10% right now. Kinross up about 10% right now. Yeah, Coeur d'Alene up 12.5. Quite a day. Hey, whatever's going on in this dollar, folks, listen to it, okay? It ain't king dollar right now. That's what's happening. And this is separate from yields, which is the fascinating part. Usually you'd see yields decrease and the dollar weakens on a less yield, right? Not happening today, man. As in, this dollar is extremely weak. And it has been, really, since that last Fed day. You were at 101.50. And, yeah, you consolidated a bit. But remember that was July 29th, folks. We're at 101.50. We've dropped almost 3 full points in the dollar, okay, from July 29th. And you take a look at the 10-year. Look at the 10-year. We're only 10 ticks away in the 10-year, right? On that day, you came into that day at about 108.16 on the 10-year. So the 10-year has barely budged. A little bit higher price, lower yield. Meanwhile, the dollar's dropped 3 full points during that time, folks. All right, so that was maybe the writing on the wall. They weren't going to get the cuts. Well, if we don't get the cuts, then maybe we'll just trade a little bit lower. And they're going to use those dollars to buy our own bonds to keep the yield lower. S&P's up by 19. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. ALPS Distributors, Inc.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks, and that's an hourly of the dollar. And yeah, you get that last acceleration at the 2 o'clock with those Fed minutes, and we're right at the lows of that first acceleration. Pretty stark move. When you look at the 30 year, you definitely get a little bit of a bounce today. We're back to 110. And you know who really likes this? The Japanese, making their job a little bit easier over there as the yen strengthens to 158.21. You come in yesterday at 159.77. You take a look at this thing on a daily. That was the dramatic intervention, right? Between the U.S. and Japan. And now you get this move here. We'll see where we can hold from here. But the yen. Yen strengthening. And of course it is. When you got a day like this in the dollar, man. Look at that move, folks, in the dollar. You know, breaking 99. You're kind of breaking this area that we got a little consolidation in May. You got a gap out here from April. Yeah, and as I talked about, we came into this war, over the weekend from February to March. So we were pushing 98 already on the dollar, and we're at 98.82 right now. And meanwhile, folks, we've had the 10-year go from 4 to 4.65. And the dollar's at the same price almost. It's not quite, right? It's a little bit higher. But it just shows you that higher yields are not helping the dollar right now at all. Not even close. Just not happening. And as a gold bull, folks, I think we got a great setup here. You know, you're going to have quite a 1-2 punch when you look at the breakaway that we got originally. That's a gold contract. Check out the GDX, though. Yeah. Because there's your original breakaway with volume, and you're going to get another big bar, man. Because it's only Wednesday. We got 2 days left. You got a bid, and you're pushing now back to where we were at the highs of April. You hit 102.39. And we have a high today of 97.47, and you got some volume, folks. Now, we're starting to come into these 3 bars here, though. I guess starting. I mean, that was all the way down to 78.74, but we do have some volume there. We're going to want some continuation volume here. We're at about 70 million shares right now. You did 108 million last week and 144 the prior week. Well, this thing's making a run for the highs, folks. And yeah, the dollar's in trouble right now. Until it changes, that's what the charts are telling you. All right, we'll check in on Monero. Yeah, this thing's not stopping either. Look at this, up 170% now. You're at $63. You're at 69. Remarkable. 169. Yeah, remarkable. All right, we talked some Fed minutes. Talked the Fed. Yeah, we talked Merck, but tariffs. So yeah, last minute deal seems like it's going to get done. The U.S. is going to have the tariffs on Canadian steel and aluminum, and they like that. So that's going to go to 25%, yet to be finalized, not expected to apply across the board. And yeah, They paused a last-minute levy, basically right at the last minute last night. 10:30, they were supposed to go into effect at midnight. And the move under discussion would generally have the U.S. tariff on imports of those two metals, which is currently at 50%. So you got Canadian steel producers ratcheting higher on that news. And the U.S. pulling back. Yes, they're going to have to compete with Canadian steel now that's not getting taxed by 50%. So we'll see what the details come out. But nonetheless, looks like progress there. And that is a good thing. And so, yeah, the debt buybacks. So the size of liquidity support buyback operations, they're going to increase by at least double, it says, folks, okay? At least double is all it says. And for securities dated from the 10 to the 30. And the 10 gets a little bit of a bid. The 30-year is really the one that got the bid. You see a drop in yields to 5.2. And that's the important question. How long-lasting the impact will prove remains to be seen. What really gets long rates lower is a slowing economy or resolution on the Iran conflict. The debt should be thrown in there as well, and that combines with the Iran conflict. You know, fighting wars, 80 billion, 200 billion, right? None of it's paid for, all that stuff. And this happened prior, okay? Treasury bond buybacks evoke a memory of Fed's Operation Twist. So this was from 2011 to pull down bond yields. Back then, even after the Fed had slashed short-term interest rates to help resuscitate the economy after the Great Recession, okay, longer-term Treasury rates remained stubbornly elevated. Now the economy's in far better shape, and that's the difference, okay? The steady bond market sell-off since the start of the war has pushed long-term yields the highest since 2007. And look what happened when they came in last time. This was the last time they came in. Look what happened afterwards, right? They came in, and this was the 10-year. Look at this 10-year, man. All right, look at this 10-year, 2.1. Look at that 10-year, 0.66%. It's amazing we didn't push out more paper at that time, right? And yeah, you can't exactly push it out because you push it out, that's going to change the yield, etc. But you can see the last time they did this, folks, what happened immediately afterwards. These are yearly notches, okay? So they were in there, looks like from September of 2011 to November of 2012 almost. And right when they stopped, the 10-year went from 1.76 up to 3%. And yeah, things got volatile and then COVID hit, okay? But, hey, we'll see where they go. It did the trick, at least temporarily. Well, if all you're worried about is temporary help, then you're all set. It's a soft form of financial repression, as they put it. I mean, pretty remarkable. We're buying back more of our own debt at a time when our deficits are just run amok. And I think that's what you're seeing play out in the dollar today. They're saying, oh, you guys are going to use the dollar to increase the amount of buybacks on the longer-term debt? That's going to artificially bring down that yield. How are you going to do that? You're going to print dollars. Well, we're not going to buy those dollars at the same rate if you're just going to print off dollars to decrease the yield. All right, let's jump around to some of those chip stocks. You got NVIDIA. Yeah, pulling back yet again coming into that closing bell right now. NVIDIA off by 0.7% right now. Micron shares off by 1%. We jump over to Target. So Target had some good numbers today. You know, I was talking about earlier in the morning program saying, boy, they're decent numbers, man. If Target can't get a bid on this one, and yeah, they did get a bid right on the opening bell. Always interesting where sometimes the market's just not, you know, true supply and demand, folks, on the opening bell. We see it all the time. So Target up by 5% on some good numbers. Walmart shares down by 0.6%, but Target's been on a run, man. A little bit under the radar. At least my radar. Look at this straight line move, man. It's almost a year. You're on a 9-month run, doubling in price from $83.44 to $159.93. And we're now above this rip lower from November 24. Pretty remarkable. You go from 160 to 83 and you get it back in less than a year. Target up by 5%. Market trading a little bit lower coming into the opening bell. S&P is up by just 11 right now. We got a NASDAQ 100 off by 87. One more segment, folks. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at the heat map. You're talking about chip stocks yet again. How about some of them, man? Dell off 7.3%, SanDisk off 4%, Seagate off nearly 8%, Western Digital off 7% right now, Lam off 6%. We got Industrials slightly in the red and a Caterpillar. They're basically an AI company with batteries. GE off 5% right now. Consumer staples, you got Target higher, Walmart, Costco in the red. Some of the consumer products, Coke up 1.8%, Pepsi as well, Procter & Gamble in the green. And Apple and Amazon higher. Let's jump to Tesla up 3.3% right now. There you go. Maybe they're selling SpaceX shares and buying Tesla shares, right? Tesla up by 3.7% right now. And SpaceX down by 3% right now. We keep our eye on yields. I think the market's selling off, coming into it right now. We'll see if the S&P's hold on to gains. We're down. We're just positive by 8 points right now. Look at this. Not sure if we just got some headlines. Let's check out crude. It's always one of the first places you can go. The headlines right now mostly dealing with the Middle East. No acceleration just yet in crude. But the dollar's not stopping. 98.80. Quite a move on the dollar right now. But yeah, you got a little bit of a pullback to end the day with the NASDAQ right now down about 0.3%. NASDAQ 100, that is, 29,493. We jump over the VIX. Now, the VIX is saying no fear whatsoever in this market, folks. 1504 for that VIX. How about it? Nobody paying up for premium. So they double the buybacks to at least $4 billion of the longest dated 30 years. Hey, we'll see. They're trying to keep them down. Try as they may. But dollar's not a fan of using those dollars to buy our long-term debt. And gold loves that. We'll finish with gold. We're almost finishing at tick highs with gold, folks. We're up $148. Folks, thanks so much for tuning in, spending your time with me. Couldn't do what I do every day without you tigers and tigresses out there. Appreciate it so much. Enjoy your night, folks. Spend that time wisely. Thanks so much, folks. Have a great night. We'll see you in the morning.